Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news, hardened political positions on trade are biting in the real economy. Firstly, Wall Street is taking a hammering today, down 1.6% so far. This follows European markets that were down all of that and more. Yesterday, Asian markets were down as well, with Shanghai down 1.4%. And it's not only equities, international bond yields are under renewed pressure again. This collective mood swing seems to be all about trade and the inability of anyone to get policy right. Trade wars are impossible to win. The US is being forced to splash around cash subsidies to farmers just to keep them in business, while factories are slowing everywhere, and the once resilient services sector is now barely expanding. It's getting more serious by the month. May American PMI data revealed a sharp and unexpected slowdown in the private sector output growth. Their factory PMI is now at a 10-year low, while at the same time their services sector is in a notable downshift in gear to a new 3-year low. New home sales in the US fell too from recent highs, and a bit more than analysts were expecting, but they are still running more than 6% higher than in April last year. Following some tentative signs that the downturn in Japan's manufacturing sector was turning for the better in April, as PMI data for May reveals these were short-lived as output and export orders fell at faster rates. While European factory PMIs are stagnant in May, revealing their expansion is still very weak. In fact, their factory sector is contracting. The IMF has said that consumers are the biggest losers in the US-China trade war, but it isn't all one-way traffic, with new data showing Australian companies increasing their business activity in May for the first time in 4 months, amid signs of a pickup in demand after a recent soft patch. New orders rose at the fastest rate in 2019 so far, according to their latest PMI readings. The dud PMIs have driven the US 10-year yield down sharply again today, down 9 basis points now to under 2.3%, and that is a very big move. While their 2 to 10-year curve is now at 17 basis points, while their negative 1 to 5-year curve has pushed out to 23 basis points in a fast shift. Gold is up $10 this morning to $1,286 an ounce. US oil prices are being thrashed today, now just at $57.50 a barrel, and a drop of almost $4, while the Brent benchmark is just on $67 a barrel. The Kiwi dollar is up marginally on a falling greenback to 65.2 US cents. On the cross rates, we're up to 94.5 Australian cents. Against the euro, we're little changed at 58.3 euro cents, and the TWI5 is now at 70.3. I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz.